giving another few minutes for students that might be a bit late or struggling to connect. So I'll be with you guys within 5 minutes. I'm just giving another 2 minutes, then we will start. In the meantime, if you guys can please comment your student number in the chat section, as well as complete the attendance register. I've posted the link there as well. Once again, good evening, everyone. I hope you all had a good day. I think some of us might have had already quite a hectic day, so hopefully we will all work together to make this an interesting session. So from the start, I ask that you guys please participate. You will see that I've shared the question that we are doing tonight on the WhatsApp group. If you didn't get it, don't stress. I will share it on the screen as well, so you will see the question. It's not really a question, it's more a information set on which I want to apply some auditing principles. So instead of giving a required, we are going to apply some auditing principles and see what comes out of that information. But just to quickly go through the house rules again, guys, by now you are familiar with it. All that I want to focus your attention on is point number 5, the voluntary WhatsApp group. If you have not already joined it, it will only be to your benefit. So just send me your name and the module code. Please don't just send please add me to the group. I need to know who you are and also the module code, please. And I'll add it, and there will be regular communication on it. We post a link to this meeting there if you don't have it. Preferably, you should get that link through via an email. If you don't, please follow that up with UNISA directly. You can leave a comment in this chat section as well. It is being monitored, so we will follow up if you don't get the link and make sure that you are on the list. Then just a final note there. Recordings will be available. They are being made of each session, and they will be made available. Point 11 and 12, please complete the attendance register and leave your student number also in the chat section, and then also complete the attendance after the evaluation form at the end of the session. That will be highly appreciated. Any questions so far before we start? Any questions? Gone. Okay, guys, you guys can switch to the given the question that I sent. I'm quickly connecting my tablet to the screen, then I will share the question on there as well. You will see that tonight's class is going to be, well, half of it is definitely going to be revision of materiality specifically. And then we're going to start looking at some substantive procedures. But materiality is something that you will encounter throughout various audit questions. So if you don't understand the concept of materiality and what affects materiality and why we calculate materiality, then a lot of things that you are going to calculate will be wrong. And materiality and substantive procedures go hand in hand because it affects what type of substantive procedures you will be conducting and what to do with the results of those substantive procedures. What type of results will require further action and what results can be considered as immaterial. So let me just quickly share here. Okay. Okay, as I said, I deliberately excluded the required from this information because I don't want it to be your mind to be, I don't know what to say, tainted with how to interpret the information. I want to discuss specific audit topics, and then we go to the information and see how would we have read the information differently. The first thing that I do want to discuss quickly is materiality. So what I've mentioned before we started about materiality is that it affects your audit procedures directly. So can anyone, and please, this must be participatory, because I need to understand what you guys understand under the concept of materiality. If we say material, what would be considered material? What information will be considered material? Or, I'm not talking about specific information, just general terms. If you go through an information set, what would you consider as something being material? I'm just going to randomly pick. And there's no right or wrong answer. I just need to know what your interpretation is of it. Audrey Meiberg.
Yes, I would say something like the end of the year, financial year date will be material.
Okay, 100%. Oko? Vandaba, I'm not sure whether I'm pronouncing your name correctly.
Yes, I'm here. So materiality also, what affects materiality is all the significant accounts at year end or high risk accounts at year end, like revenue debtors. Those are material accounts.
Okay, am I pronouncing your name correctly, Oko?
Yes, yes.
Okay, great. Kurt, your hand is up.
Thanks, Charles. I would regard something as material in the audit sense. Anything disclosed on the annual financial statements that can influence the decisions of the users of those financial statements.
Definitely. So your and Oko's answers go hand in hand, because if it lands in the financial statements, it will affect decision making. But now if I go a step, since those answers are absolutely correct, because that is something that's material. But if I'm the auditor and I look at the set of financial statements and I look at my testing, so I've done testing and there's some results that came out of that testing that I did. What would be considered material? In other words, what should I report on? What would influence my decision to communicate those errors? Roald?
Sorry, could you just maybe repeat that again, the question?
No problem. So Oko and Kurt said, items that appear on my financial statement is material, 100% accurate. But what would I, as the auditor, in my testing, in the results of my testing, consider as material?
I would explain that is there's like in the testing, then you have like a specific amount that you'll like say is material, and everything above that you'll use in testing, if I'm correct. And you have to consider that if all the amounts less than that is not material.
100%?
Okay.
All the answers I'm getting is accurate. It's definitely pointing in the right direction. So something is material if its omission or misstatement will affect the users economic decision making. So that is the two words that you need to consider. So if you find something in the testing, like Oko said, in your debtors, your accounts receivable, your revenue or income, and as Kurt said, items on the financial statements, that if you find something in your testing and you know that if it's omitted or misstated, it will affect whoever's going to look at that that set of financial statements It's going to affect their economic decision making. Then something is material. What is the relationship between materiality and audit risk? Raphael, would you like to take a jab at that one?
Yeah, I was afraid because I have no idea. If I was supposed to take if I was going to take a guess, Lord,
Yes.
I would probably say that um, audit risk. If something is material, then that specific risk has to be. How can I say this in a way that makes sense? That cannot be ignored. So if something is immaterial, then we can ignore it. If I was to guess,
Okay.
that's my best guess.
No problem. It's a good guess. Anyone else would like to take a jab at that? What is audit risk? Audit risk is you going through this question and not identifying, after you've applied all your carefully considered audit procedures, your substantive procedures, your testing of control, and you've given an opinion, that opinion is wrong in very layman's terms. It means that there's something in the financial statements that is there, lying there undetected, that could actually prove your opinion completely wrong. That is a risk we take because we are giving reasonable assurance. We are not giving absolute assurance. Yes, Kurt.
So based on that, Charles, you basically led us to the answer now. I would
Yes.
say your evaluation of audit risk will determine your level of materiality.
100%. There's and please don't shout at me for spelling. My spelling has never been my strong suit.
Because if audit risk is high, you will accept a lower materiality level for the chances of not expressing an incorrect opinion.
The higher the materiality, the lower the audit risk, and vice versa.
Charles, can I ask a question, which
Yes,
is
please.
unrelated to whatever you've been saying now? Is this this being recorded? What we're doing right now? Because I would like to know if I need to take notes or not.
No, this is being recorded, so you guys can make notes, you can listen, you can. I'm also one of those people, whenever I'm in a meeting, I have to record the meeting because I need to listen and ask questions on the spot. I can't
Okay, so
make notes whilst listening.
this is going to be made available to us afterwards.
Yes. Yeah.
Okay, cool. Thank you.
I think the standard protocol currently is within 48 hours. It's available on the UNISA website.
Okay, cool. Thank you.
100%. So getting back to what I was saying, inverse relationship, the higher the materiality, the lower the audit risk. Why are we saying this? Because the more I suspect my audit risk to be high, the more items I will test. And I can only test more items if my materiality is low. If you think about it, let's assume my materiality figure is based on, let's say for argument's sake, fixed assets. And let's say fixed assets are 1 million. And I decide that based on my preliminary audit engagement activities, test of controls, and all other factors that I have to consider before I determine my materiality, that my audit risk is, let's say for this example, acceptable. It's low. I don't have I don't suspect there to be a very high risk. I will say 20%. So that means whenever I test any error above 200,000, I will consider material. So the more relaxed I am about the information, I'm talking very layman's terms here, guys. The more relaxed I am about the state of the client's affairs and the information that I've gathered so far, the lower that percentage will be. And the lower that percentage, the lower my audit risk, the higher this will be. So that means any item less than 200,000 must be tested. So anything less than, sorry, inverse what I just said. Anything lower than 200,000 won't be tested. So if I look at my trial balance and there's an account of 50,000, that account won't be tested. Everybody happy with what I just said there?
Yep, makes sense.
Okay, because I'm happy with the state of the current affairs of the company. I don't suspect there to be a risk or something looming that I'm not aware of. But if I am worried, then my audit risk will obviously go up, and that will have the inverse effect. So always make sure that you understand why we say materiality goes up, and audit as audit materiality goes up, audit risk comes down. The bigger this amount, or the more items I test, we keep on going to the wrong inverse. The more items I test, the lower my audit risk. There are more accounts subjected to my testing, the lower my audit risk. Everybody happy with that?
Can you please repeat that again?
Okay, so the higher my audit risk. Kurt, do you want me to complete that explanation first, or do you have a question on that I can answer together?
No, you can complete. I have a additional question, Charles.
Okay, 100%. So the higher the audit risk, the lower the materiality needs to be in order to reduce the audit risk to an acceptable level. In other words, the lower the materiality, the larger the extent of the audit coverage obtained will be, and the greater the scope will be. So the lower the materiality, the more items I will test. So if I look at my trial balance, remember my trial balance contains all the accounts that in some way will make their way to the financial statements. So I have my trial balance, and my trial balance will go to my financial statements. So if I audit my trial balance, the lower the materiality, the more accounts will fall into my audit scope. So the higher the audit risk, it means the more concerned I am and the more prudent I have to be. So I need to test more. And to be able to test more, I have to have a lower materiality. So my materiality figure needs to go lower. So that means that 20% that we calculated needs to go down. Because at this moment, we are saying, if we rely on 1 million, so we based our materiality figure, the 200,000, on our fixed assets. Because remember, when you calculate materiality, you have to base it on something that is very sustainable. So you have to evaluate whether revenue is very sustainable and maintainable in the future, or fixed assets. And it depends on the industry that you are in, but most cases, fixed assets will be the one that you rely on most because it's most stable and less volatile. So if you choose 1 million to be your basis for calculating materiality, the lower that percentage, it means the higher your audit risk. So the lower that percentage go, the lesser that amount will be. So meaning if that amount goes down to 100,000, it means you have to go look at your trial balance. And as all those accounts are listed in your trial balance, every account that exceeds 100,000 will fall into my scope of the audit, and I will execute audit procedures on that amount. So just repeating that one more time, then I'm coming back to your question, Kurt. The higher my audit risk, the lower my materiality. The more concerned I am, the lesser or the lower this amount needs to be. Because the lower that amount, more transactions and more accounts will fall over that amount and into my scope, because it means that everything above 100,000 must be thoroughly examined. Every account above 100,000 must be thoroughly examined through substantive procedures. Oko, are you happy with that explanation?
I'm very happy. Thank you, Charles.
Thank you. Good. You're still muted, good.
Sorry, Charles. I was
No
thinking
problem.
to myself there for
as long as you didn't get an answer, I'm happy.
It wasn't anything material that I said. Don't worry. This might be a stupid question, and
no
I
stupid
think
questions.
with your explanation, you have answered it actually, but just for confirmation, which do you determine first, audit risk or materiality?
Audit risk.
Okay, happiness.
Let me actually, while you're asking me that question, let me quickly, I have a schematic drawing of audit risk. So while you're asking that, I think it might actually add value if I throw that up on the screen. Just bear with me. Let's quickly go have a look here. Just to answer your question, you definitely have to determine your inherent risk, your control risk, and your detection risk. You have to determine those items first. To get that, you know, when you have a picture in your mind already of something that you want to show, and now you have to go find it. But I think that will makes a lot of sense. But those three risk items determine your audit risk: inherent risk, detection risk, and control risk. So inherent risk is the risk of no matter what controls the company have, no matter what controls are in place, there's still a chance of something going wrong. There's still a chance of a material misstatement. There's still a chance of fraud going undetected. That's the inherent risk. I always use the analogy for inherent risk as a thatch roof versus a tile roof. the inherent risk of a thatch roof catching fire is much higher than a tile roof. No matter what you do to a thatch roof, it will always be more likely to catch fire than a tile roof. In other words, inherent risk. Control risks is where I have controls in place, but there's still a risk of fraud or errors happening. Although I have a tile risk, although I have a tile roof with all the necessary fire equipment handy, something can go wrong and that house can still catch fire. That's a control risk. The controls do not do their job. The controls do not prevent the fraud from happening. So those three risks sections affects when combined affects your audit risk. Guys, I'm not going to find what I'm looking for now, so I'll put it up later. But make sure if you want to go through it again, make sure that you just go catch up on 3701, AUE 3701, audit risk. If you can't find what you're looking for, if you're not happy, wait, yeah, I think I've got it there, I've got it. Seek and you shall find. So there we have inherent risk plus control risk. I've just explained inherent risk and I've explained control risk. That gives us a risk of material misstatement. If we add detection risk, because remember detection risk is almost an audit risk. That's a risk of our audit procedures not detecting the problem. Okay, so inherent risk and control risk is more with the company themselves. The company is in the business that the company is currently conducting increases the inherent risk, for example, of fraudulent activity based on the nature or based on the industry that the company is functioning or operating in. So now they also have controls that they have in place in that company. And there's also a risk that those controls do not, how can I put it, do not achieve what they were designed to do. If you add those together, you get the risk of material misstatement. So we as the auditors need to employ controls or procedures, taste of controls, substantive procedures, preliminary audit engagement activities, all those things we need to do to ensure that our detection risk is low. But it remains a risk. If we add that to the risk of material misstatement, we finally get our audit risk. So that means, coming back to what I said in the beginning, our audit risk is the risk of our opinion being wrong. The opinion that we are making in our financials, in our audit report at the end of the audit, is not a true reflection of what is actually going on in the company. That is our audit risk. So to curb that, the higher our audit risk, the lower our materiality figure, because the lower our materiality figure, the more items falls into the scope net because of their value. So I think you guys are happy with that. I'm gonna quickly go on to the notes again. Just see if there's nothing else I wanted to mention here. Excuse me. Okay, 100%. I think that covers materiality. Any other questions on materiality? Can materiality that our materiality figure, can it change? Are we allowed to reassess our materiality figure?
I'm gonna say yes.
I would say yes.
Yes. Good, Audrey, you guys are correct. When do we assess our audit materiality, AHA materiality?
Charles,
Yes, Oko.
I think as the standard says that we must continually assess our materiality, especially if there's any new information that can have an influence on our financial information we get from the client.
The main materiality figure that we work with, however, is our planning materiality. And that's what I said in the beginning. We need to determine we need to determine a stable basis on which we calculate our materiality. And as Orko then said, that is just our starting point for determining our initial scope. If we go through our audit procedures and we see that stuff is not as it looked like in our planning phase of the audit, obviously then the standard say we must continuously reevaluate materiality, because we need to continuously decide whether we need to test more items or fewer items. So definitely very, very, very true. We have a planning materiality, continuous evaluation of that materiality, and then we have a final materiality that we conclude with. So just on that. Then let's look at audit procedures. Okay, I think I would like to go through the information. So if you guys have the information, let's quickly go through that and let's see what we can pick up. So what I want us to do now, if we read through these this information, I want us to identify items that can have an effect on our risk, what we think the risk level of this company is. So in other words, if you think about the three risk items: inherent risk, control risk, and then eventually that it affects a detection risk. Let's read this information and identify items that can have an effect on those risk factors. So let's read. They say here, Swift Kick Soccer Club Pty Limited is a company that organizes football leagues where corporate teams are ranked into categories based on their level of skill. Soccer games are played on Wednesday evenings, where teams play against each other in order to improve their ranking. The year end of the company is 31 December. You are the auditor in charge of this audit client. This is the first year that you audit that. Oh, sorry, why am I now? First year that your audit firm will audit this company. The previous auditors resigned as a result of a disagreement with management. That is always an extremely high indicator that something might be wrong. We don't say that something is wrong, but if an auditor resigns because of a disagreement with management, you need to identify what that disagreement was and to see would you have been happy if you were those auditors. Because remember, we are all using two sets of standards. We are using for audit, we are using the ISA standards. Okay. And for accounting, we are using IFRS. So what could the disagreement have been about? Because we say that if you think about this, the whole concept of reasonability, if the reasonability concept is applied, it says that someone with reasonably the same skill set as you, reasonably the same experience as you, and reasonably in the same set of circumstances as you would have arrived at the same conclusion as you did. So with those two standards already governing us, how could there have been such a great disagreement that they felt compelled to resign? So we need to identify where the issue was. So we need to speak to the previous auditors, and we obviously need to get management representation. But that's all, there's already a risk. Your firm has already performed all the necessary pre-engagement activities, but remember that's what we said, we're not reading this question to think about what the required was. So you already performed all the pre-engagement activities, and during these activities, no irregularities, sorry about that, no irregularities were identified. Okay, cool. You are in the process of planning and performing the audit of the company for the year ended 31 December 2011. The deadline of the audit is 15 March. What do you need to consider there? Is there enough time to complete the necessary audit procedures in time to reach that level where you are comfortable in giving an opinion that is representative of the company's true financial position? The company was formed 3 years ago, so relatively young. And although for the first 2 years the company was not able to make any profits, what do you need to consider there? Can anyone take a guess? Rolled. If I say the company that you are about to audit, they've not been making profits for the past 2 years, what is one of the biggest risks that comes to mind?
Going concern.
Yes, going concern. Yes, going concern.
Great. Because going concern is what? It's affected or discussed in IFRS. IFRS says that if you are not a going concern, your whole basis of representing your financial statements must be different, because what's the whole idea of materiality? Any information that can affect the decision making of the users of the financial statements. Okay, so very important there. So you need to think about your regulatory authority as well as the users of the financial statements. The company earns its revenue from subscription fees paid by corporate teams that enter the league. The league begins at the beginning of June each year, and the soccer year ends at the end of April the following year. So if we think subscription fees and we look at the year, when is subscription fees usually paid?
Before you start or something.
Yes.
Yes. So meaning they paid something up front that might be not part of the financial year.
100%. It's annually. So if you look at revenue, what is the financial rule with regards to revenue? It must be earned before it can be revenue. And earned is whether money or payment has been received or not is irrelevant. The key concept is that revenue must be earned before it can be disclosed as that. So if I have a specific accounting or financial period and I receive money that covers a different period, only that section can be allowed as revenue. So we already know that we must apply audit procedures on revenue to ensure that it is included in the correct financial period. All subscriptions, so I'm now back here. All subscriptions that the company receives from its teams are received in advance, as Kurt said. For the period of the beginning, for the period beginning June and ending April of the next year. So there it already says we are talking about income received in advance. So income in advance gives rise to a creditor. The part of the financial year or the part the part beyond the current financial year for which you've received money, for which you have not yet received the services that those people paid for, is an income in advance, and that's a creditor. Okay. Any questions on that? So revenue recognition, if I have to make a note here, revenue extremely important. What, just as a guess, and I'm going to leave it with you guys, just as a guess, what income or what IFRS statement deals with revenue recognition? Can anyone tell me?
Statement of profit and loss and other comprehensive income.
100%. And accounting standard?
IFRS 15 times.
IFRS?
15.
Sure.
As far as I can remember.
You are definitely
you're asking us to remember old stuff here. I don't know. I can Google it. I can Google it if you want me to.
IFRS 15 is definitely accurate because it's the new standard on revenue recognition. I think the old standard was IAS 19 or 18, if I remember correctly. IFRS 15 is the new revenue recognition standard. So there obviously is an accounting standard that applies. And we need to make sure that we account for that accurately if we look at the financial statements. Okay, the company employs 15 referees who referee on a Wednesday evening and 5 ground staff to ensure that the soccer fields are kept at the highest quality. The previous accountant of SKSC resigned at the beginning of January after a disagreement with management. So both the previous auditor and accountant has now left. Yes, Kurt.
You skipped the section, Charles. It was discovered that during the previous year of assessment, one of the members of management responsible for the receiving of subscription fees took a certain amount of cash.
Thanks for that, Kurt. So there's obviously massive risk item, because what is one of the biggest areas of our auditing before we get our audit execution, before we get to substantive procedures, is test of controls. Will this affect our audit risk?
Most definitely.
Exactly. It will affect both our control and detection risk. Because it's a situation or information that's indicative of a weak control environment, meaning that the current controls in place will not be able, or it's most likely not to detect fraudulent activities.
Or it could be overwritten because of management having the power to do so, since it is a
Exactly.
manager who's getting the money.
Which is, I think, more likely in this case if we look at the disagreement with management of the previous auditors, together with the accountant that I read before skipping that part that Kurt pointed out. So there's a lot of disagreement with management. So we need to look at the entire control environment with both weak controls and the overwriting of controls that are there. So the moment that we have a weak control environment, what is the effect that it will have on substantive procedures? What is the effect? Let me pose the question again. What is the effect that test of controls have on my substantive procedures?
I think in this case, it's gonna you're gonna have to do more additional checks and more procedures, because obviously you have to dig deeper and to see what's really happening.
100%. 100%. The weaker your test of control the weaker your control environment, as indicated by your test of controls, the more substantive procedures you'll have to test, because you have to get a better answer into the various accounts. So you need to go to assertion level and test whether those amounts are actually what it is reflected to be.
And then Charles, to go back to audit evidence,
Yes.
just to align it to the substantive procedures. Am I correct in saying that we will be more reluctant to rely on management representation in terms of audit evidence?
Definitely.
Okay.
And we will also be more reluctant to rely on any direct information obtained from management. So we will definitely be more reliant on third-party confirmations. So we will seek, as part of our audit evidence, third-party confirmations. So where we know, for instance, if we want to test revenue, and we have a list of all the clubs that are registered with this company, we would rather go to those clubs and obtain either proof of payment or invoices received to substantiate our revenue figure than relying on internally generated statements, if I can put it like that. So yes, it will definitely have an effect on what we rely on. And as Orko said, we continuously evaluate our materiality, and our materiality would definitely have taken a negative knock. It would have gone down because audit risk went up. So we are now testing more substantive procedures, but more accounts will fall into the scope of audit testing at a substantive level, and obviously financial statement level, and then also assertion level. Guys, I see time is catching up with us, so I'm going to leave that there. And no, we are not done. We will continue with this question, but for homework, please go through this question again. Not question, information set. Like I said, I deliberately left out the required part. And I want you to identify two things. I want you to continue identify risks, things that seem to be ominous, and identify what effect it will have on what type of risk. Eventually concluding what the effect on the audit risk will be, how it will affect my materiality. Will I have to test more items? And then if you think substantive procedures, please go to the section in your study guide that deals with substantive procedures and think what type of substantive procedures you would have applied on the rest of the given information. But on exam technique, I want you to specifically focus on using the accurate terminology. Like I said in one of the previous auditing classes, if it says inspect, use the word inspect. observe, recalculate, analytical procedures. Use those words and then you explain. So first tell the examiner you know what you are talking about. You are talking about inspection, observing, all those things, and then you can explain. But first use the keywords. Guys, before I say goodbye, please, if you haven't done so already, please post your student number in the comment section. Remember to send your name and module code to that cell phone number. Let me just put that up again. And then lastly, please complete the attendance register as well as the evaluation feedback form. Are there any questions?
When's the next class?
The next class will be next week. Just check out the emails, but it will probably be from 5 to 6, the original time.
Okay.
This evening we just had to start a bit later due to work commitments. Audrey.
Yeah, this is now not of the information related. The attendance register, when I click on it, it keeps on saying I don't have permission to open the form, so I can't actually complete the attendance register.
Okay, 100% noted. Did you put your student number in the comment section?
Yes, I did.
Okay, then we will pick it up as well.
Perfect. Thank you.
Thanks, Audrey. Guys, yeah, please, if there's no other questions, have a good evening. For those that has MAC, I will see you in the next facilitation class. Enjoy the evening, guys.
Okay, bye.
Bye-bye.
Bye-bye.